Imagine Sarah, 32, staring at another rent increase notice. For years, she's dreamed of a place where she can paint a wall without permission, where her money builds equity, not someone else's. But the thought of actually buying a home? It feels like climbing Mount Everest in flip-flops. Overwhelming, complex, and full of jargon that sounds like a foreign language. This feeling, experts suggest, is a major barrier for aspiring homeowners. But what if there was a simpler path? The internet is a vast ocean of advice: get pre-approved, save 20% down, check your DTI, find a good realtor. Each piece of information, while potentially useful, adds to a growing mountain of tasks. A recent survey by a major financial institution indicated that first-time buyers report spending an average of 150 hours researching before even submitting an offer. For someone with a busy life, this isn't just daunting, it's paralyzing. How do you cut through the noise? This isn't about being truly lazy. It's about being strategically efficient. It's about identifying the absolute minimum, highest impact actions you need to take, and delegating the rest. Think of it like cooking. You don't need to be a Michelin star chef to make a delicious meal. Sometimes, a few simple, well-chosen ingredients and a clear recipe are all it takes. Our goal is to demystify the process, revealing the surprisingly simple core of homeownership. One of the biggest hurdles, frequently cited by potential buyers like John, 28, who felt stuck renting, is the belief that you absolutely must have a 20% down payment. This advice, often passed down through generations, stems from a time when mortgage options were fewer and more rigid. While 20% does mean avoiding private mortgage insurance, or PMI, it's far from the only path to homeownership today. This common misunderstanding keeps many people on the sidelines unnecessarily. Current market data paints a different picture. According to the National Association of Realtors, first-time homebuyers often put down significantly less. In 2022, their median down payment was just 7%. For certain loans, such as FHA loans, the minimum required down payment can be as low as 3.5%. Veterans Affairs (VA) loans, available to eligible service members, even offer 0% down. These options make homeownership accessible to a much broader demographic than commonly assumed. Another intimidating belief is that only those with a spotless, perfect credit score of 800+ can qualify for a mortgage. This can feel like an impossible standard for many, like Maria, who once had a few late credit card payments from her college days. While a good credit score is undoubtedly beneficial for securing better interest rates, a perfect score is not a prerequisite for approval. This myth often deters individuals who are otherwise financially stable. Lenders assess your credit history to gauge your reliability in repaying debt. While ideal scores are in the upper 700s, many conventional loan programs consider scores as low as 620. FHA loans, for instance, can accept scores starting around 580 with a 3.5% down payment. What's crucial, according to credit counselors, is not perfection, but demonstrating a consistent pattern of on-time payments and managing your existing debt responsibly. Focus on stability, not an unattainable ideal. So, how does a lazy person begin this journey? The key is to start with the single most impactful step that clarifies your financial standing and empowers your search: getting pre-approved for a mortgage. This isn't just a suggestion, it's the strategic cornerstone for efficient home buying. Think of it as your golden ticket, confirming what you can realistically afford before you even start looking at properties. It prevents wasted time and emotional investment in homes beyond your budget. A mortgage pre-approval is a conditional commitment from a lender stating how much money they are willing to lend you. It's based on a preliminary review of your financial information, including your credit score, income, and assets. Unlike pre-qualification, which is often a quick, informal estimate, pre-approval involves a more thorough check. Financial experts consistently recommend pre-approval as the crucial first step for serious buyers. It gives you a clear budget and credibility. The lazy benefit here is immense time saving. With a pre-approval in hand, you know your budget, so you only look at homes you can afford. This prevents the heartbreak of falling for a house that's out of reach. Additionally, a pre-approval letter makes your offer more attractive to sellers. As one real estate agent noted in an industry forum, a pre-approved buyer signals seriousness and reduces closing risks. This can give you an edge in competitive markets. You don't need to interview every bank in town. The lazy person's approach is to leverage trusted networks and specialized tools. Start by asking friends, family, or your eventual real estate agent for lender recommendations. Often, local lenders are highly responsive and knowledgeable about regional programs. Online mortgage brokers can also quickly compare rates from multiple lenders with a single application, saving you hours of individual research. Aim for 2 to 3 quotes for comparison. The prospect of gathering documents can feel like a scavenger hunt. But for pre-approval, it's a manageable list. Lenders typically ask for recent pay stubs, W-2 forms for the last 2 years, bank statements, and tax returns. If you're self-employed, expect requests for more extensive financial records. The trick is to have these readily accessible, perhaps in a digital folder. This proactive step dramatically speeds up the pre-approval process, as noted by financial advisors. During pre-approval, the lender will perform a hard inquiry on your credit report. This temporarily dips your score by a few points, typically 3 to 5. However, credit reporting agencies understand that consumers shop for the best mortgage rates. Therefore, multiple mortgage-related hard inquiries within a 14 to 45-day window are usually counted as a single inquiry. This is crucial for rate shopping. Don't let one hard inquiry deter you from comparing lenders. Your score recovers quickly. Lenders also assess your debt-to-income (DTI) ratio. This is a simple calculation, your total monthly debt payments divided by your gross monthly income. For example, if your debts, car payment, student loans, credit cards, are $800 and your gross income is $4,000, your DTI is 20%. Most lenders prefer a DTI of 36% or less, though some programs allow up to 43 to 50%. Financial advisors recommend aiming for a lower DTI as it indicates better financial health and borrowing capacity. Full, detailed budgeting can be tedious. For home buying, the lazy approach focuses on the big picture. Your pre-approval provides your maximum loan amount. Now, consider your current monthly spending and how a new mortgage payment, including property taxes and insurance, fits in. The goal isn't to meticulously track every coffee, but to ensure your major expenses leave enough room for a home. Financial planners suggest focusing on categories rather than individual line items for a high-level overview. Your monthly mortgage payment isn't just the principal and interest. It's often referred to as PITI, principal, interest, taxes, and insurance. Principal reduces your loan balance. Interest is the cost of borrowing. Taxes are property taxes, often escrowed by the lender. Insurance includes homeowners insurance and, if applicable, private mortgage insurance, PMI. Understanding PITI is crucial for realistic budgeting. Many first-time buyers underestimate the TI part, leading to surprises. Escrow can sound complex, but it's designed for convenience. Often, your lender collects a portion of your annual property taxes and homeowners insurance premiums each month, holding these funds in an escrow account. When taxes or insurance bills are due, the lender pays them on your behalf. This prevents you from needing to save up large lump sums and potentially missing payments. It's a system, consumer finance experts confirm, that simplifies financial management for homeowners. Beyond the down payment, closing costs are another significant expense often overlooked by first-time buyers. These are fees associated with finalizing your mortgage and transferring property ownership. They typically range from 2% to 5% of the loan amount and can include origination fees, appraisal fees, title insurance, and legal fees. Financial advisors consistently recommend budgeting for these costs upfront. Sometimes, sellers may contribute to closing costs, but this is market dependent. Saving for these upfront costs doesn't have to be an arduous process. The lazy approach to saving involves automation. Set up automatic transfers from your checking to a dedicated savings account each payday. Even small, consistent contributions add up significantly over time. Consider cutting a few discretionary expenses, but don't feel obligated to drastically alter your lifestyle. Many banks offer high-yield savings accounts that can accelerate your savings growth with minimal effort. Once pre-approved, the fun begins, finding your home. For the lazy person, this means being focused and efficient. Start by clearly defining your must-haves versus your nice-to-haves. This isn't about compromising on what truly matters, but about avoiding endless searching for an elusive perfect property. A study by housing market analysts suggests that buyers who narrow their criteria early tend to have a smoother, faster home search process. Clarity saves time. This is your core filter. Does it need to be a certain number of bedrooms? A specific school district? Within a certain commute time? Keep this list short, no more than 3 to 5 absolute deal breakers. Everything else is flexible. For example, 3 bedrooms might be a must-have, but hardwood floors could be a nice-to-have. This approach, advocated by efficiency coaches, prevents analysis paralysis and keeps your search focused on genuinely suitable properties. The best friend of the lazy home buyer is technology. Websites and apps like Zillow, Redfin, and Realtor.com allow you to set detailed filters based on your non-negotiables. You can get daily alerts for new listings that match your criteria, minimizing the need for constant manual searching. One real estate tech expert noted, modern platforms do the heavy lifting of sorting. Your job is to refine the filters. Utilize virtual tours and high-quality photos to weed out unsuitable properties before physical visits. This is perhaps the ultimate lazy lever, a great real estate agent. Their expertise is invaluable. They understand the local market, have access to listings before they hit public sites, and handle much of the logistical heavy lifting, scheduling showings, communicating with sellers, and preparing paperwork. Their commission is typically paid by the seller, making their services essentially free to the buyer. This delegation saves you countless hours and potential headaches. How do you find a good one? Seek referrals from friends or your lender. Look for someone with strong communication skills, deep local market knowledge, and a track record of working with first-time buyers. A good agent will listen to your non-negotiables, offer honest advice, and not push you into properties outside your budget or preferences. As industry veteran, Barbara Corcoran suggests, find someone who genuinely listens and anticipates your needs. When physically touring homes, don't feel pressured to spend hours on each. For the lazy person, it's about efficiency. Take clear photos and videos, especially of any concerns. Ask your agent about things not immediately visible, like the age of the roof or HVAC system. Focus on flow, natural light, and structural integrity. Don't get swayed by minor cosmetic issues, those are often easily fixed. One homeowner recounted, "I almost passed on my dream home because of ugly wallpaper." While cosmetic issues are often minor, some red flags warrant closer attention. These include signs of water damage, stains on ceilings or walls, significant cracks in the foundation, persistent musty odors, potential mold, and outdated electrical panels. Your realtor can help identify these. These aren't necessarily deal breakers but indicate areas requiring professional inspection and potentially costly repairs. Being aware saves time and money down the line. This is one area where lazy is not an option. A home inspection is a non-negotiable step. A professional inspector will thoroughly examine the property's structure, systems, and components, from the roof to the foundation. Their report will detail any issues, from minor repairs to major structural problems. This is your primary protection against unforeseen expenses. A survey by home inspection firms indicates that over 80% of inspections reveal issues requiring attention. Once you've found the one and reviewed the inspection, it's time to make an offer. This process is largely handled by your real estate agent. Your job is to decide on the offer price and any contingencies. Your agent will draft the purchase agreement, ensuring all legal requirements are met. It's their expertise that makes this step feel effortless for you. Financial journalist David Bach advises, let your professionals do their job. Don't micromanage the offer. A typical offer includes the purchase price, the amount of earnest money, a deposit showing your commitment, proposed closing date, and contingencies. Contingencies are conditions that must be met for the sale to go through. Common ones include a financing contingency, you get the loan, an inspection contingency, you're satisfied with the inspection report, and an appraisal contingency, the home appraises for at least the offer price. These protect you. Let's dive deeper into contingencies. The inspection contingency allows you to renegotiate the price or request repairs based on the inspector's findings, or even back out if major issues arise. The financing contingency ensures you won't lose your earnest money if your loan falls through. And the appraisal contingency protects you from overpaying if the home's appraised value is less than your offer. Real estate attorneys emphasize their importance. Never waive contingencies without clear legal advice. Your agent will guide you through negotiations. For the lazy buyer, the key is to be clear about your bottom line and let your agent do the talking. While a lower offer might be tempting, in a competitive market, a strong, fair offer with minimal contingencies can be more effective. Real estate experts often advise balancing price with other factors like flexible closing dates or waiving minor repair requests to sweeten the deal. Don't get emotionally invested in the back and forth, rely on your agent's strategy. Expect a counteroffer. It's a common part of the negotiation process, not a personal rejection. The seller might counter your price, ask for a different closing date, or propose changes to contingencies. Your agent will present this to you and help you formulate your response. This back and forth can happen a few times. Real estate coach Tom Ferry states, most deals aren't accepted on the first offer. It's a dialogue. Be patient and trust your agent's counsel. Once your offer is accepted, you'll provide earnest money. This deposit, typically 1 to 3% of the purchase price, demonstrates your serious intent to buy. It's usually held in an escrow account by a neutral third party, like the title company. This money goes towards your down payment or closing costs at the end. However, if you back out of the deal for reasons not covered by your contingencies, you could lose it. It's a commitment, but protected by those contingencies. Congratulations, you're under contract. This means the seller has accepted your offer, and both parties are legally bound, subject to contingencies. For the lazy person, this phase is largely a waiting game, punctuated by a few key actions. Your lender and agent will coordinate much of the activity, which includes the home appraisal, title search, and final loan underwriting. Your main task is to respond promptly to requests for additional documents or information. Your lender will order an appraisal to ensure the home's value justifies the loan amount. An independent appraiser will assess the property and compare it to recently sold, similar homes in the area. This protects the lender from overlending and you from overpaying. If the appraisal comes in lower than your offer, your appraisal contingency becomes crucial. Housing market analysts confirm this step is vital for financial security. A title company conducts a title search to verify that the seller has the legal right to sell the property and that there are no hidden claims or liens against it. This might sound obscure, but it's critical. Imagine buying a home only to find out later that an old, unpaid contractor's lien prevents you from selling it or that someone else has a claim to part of the land. Title insurance, which you'll typically pay for, protects against these unforeseen issues. It's proactive problem solving. Before closing, you'll need to secure homeowners insurance. This policy protects your investment and is typically required by your lender. It covers damage to your home from perils like fire, theft, and natural disasters. Shop around for quotes. Your agent or lender can often provide recommendations for insurance brokers. This isn't a lazy step to skip, but rather a crucial safeguard for your most significant asset. Protecting your home is protecting your financial future. This is where your lender performs a final, deep dive into your finances. Underwriters meticulously review all your submitted documents to ensure you meet all lending requirements. They're looking for consistency and accuracy. This process can sometimes feel intrusive, with requests for additional paperwork, but it's their due diligence. Responding quickly and patiently to these requests minimizes delays. One loan officer described it as the final quality control check before funding. A few days before closing, you'll do a final walkthrough of the property. This is your chance to ensure the home is in the condition you expect, any agreed-upon repairs have been completed, and no new damage has occurred. Don't skip this, even if you feel it's lazy to do so. It's your last opportunity to identify issues before taking ownership. Real estate lawyers consistently advise, always do the final walkthrough. This is it. Closing day. For the lazy person, this means showing up and signing a lot of papers. You'll typically meet at the title company or attorney's office with your agent and potentially the seller's agent. A closing agent will guide you through every document, explaining what you're signing. It can take an hour or more, but your primary job is to review, ask questions, and sign. It's the culmination of your efficient journey. The stack of documents might look daunting, but most are standard. You'll sign the promissory note, your promise to repay the loan, the mortgage or deed of trust, gives the lender claim to your property if you don't pay, and the closing disclosure, itemizing all transaction costs. Don't feel rushed. Ask for clarification on anything you don't understand. Your agent and the closing agent are there to help ensure you comprehend each step, according to consumer legal advocates. After handing over the keys, that aha moment hits. Sarah realized that while the process of home buying is complex, her role as the lazy first-time buyer was surprisingly manageable. She didn't need to become a mortgage expert or a real estate guru. She just needed to identify a few key decision points, gather specific documents, and, most importantly, delegate effectively to trusted professionals like her lender and agent. The perceived mountain was actually a series of small, guided steps. You've done it. You've navigated the often intimidating waters of first home buying using an efficient, lazy approach. This means you've successfully leveraged experts, focused on high-impact actions, and avoided getting bogged down in unnecessary details. The reward? Not just a set of keys, but a tangible asset, a place to call your own, and the satisfaction of achieving a significant life milestone. This is the goal of strategic inaction where it counts. Even after closing, a few lazy tasks remain. The most immediate is setting up utilities in your name: electricity, gas, water, and internet. Your realtor can often provide a list of local providers. Next, consider changing the locks for security. Finally, it's time to celebrate and enjoy your new space. Don't let these minor administrative tasks overshadow your accomplishment. Prioritize, delegate what you can, and enjoy. To recap, lazy home buying isn't about cutting corners on due diligence or making rash decisions. It's about smart delegation and focusing your energy where it matters most. It's about accepting that you don't need to know every single detail of every single form, because you've empowered professionals to handle those complexities for you. Financial literacy experts agree, knowing what to delegate is a sign of intelligence, not indolence. Even with a lazy guide, watch out for common pitfalls. One is emotional overspending. Don't let a bidding war push you beyond your budget. Another is waiving contingencies unnecessarily. This removes crucial protections. Lastly, don't ignore professional advice, even if it feels like more work initially. Your real estate agent, lender, and inspector are there to safeguard your interests. Trust their expertise to keep your process smooth and efficient. Owning a home isn't just a place to live, it's a powerful financial tool. Over time, as you pay down your mortgage and property values generally appreciate, you build equity. This equity can be a source of wealth, a buffer for emergencies, or even fund future investments. While market fluctuations exist, historical data from economists consistently show that real estate, over the long term, tends to be a robust asset. It's an investment in your future. So, what's in the lazy person's ultimate homebuying toolkit? First, your pre-approval letter, your foundational financial clarity. Second, a trusted real estate agent, your expert navigator. Third, patience, because even with efficiency, some things take time. These three elements are your essential companions, minimizing your workload and maximizing your chances of a successful, stress-free home purchase. Keep it simple, keep it focused. The journey to homeownership doesn't have to be intimidating. By embracing the lazy person's guide, you've equipped yourself with a mindset of strategic efficiency and a clear understanding of the most impactful steps. You're not cutting corners, you're just cutting out the noise. With these principles, that dream of painting your own walls and building your own equity is closer than you think. Take that first step and trust the process. Ready to take that first step? Start by checking your credit score and gathering those key financial documents. Then, connect with a lender for your pre-approval. Remember, this isn't a sprint, but a marathon managed with smart, measured strides. You've got the knowledge, now it's time for action. The satisfaction of owning your first home, achieved with minimal fuss, is a reward well worth the effort of getting started. If this guide helped demystify the home buying process for you, please give this video a thumbs up. What's your biggest fear about buying a home, or your best lazy tip? Share it in the comments below. And don't forget to subscribe for more actionable, no-nonsense guides to navigating life's big decisions. Hit the notification bell so you don't miss our next video. We're here to make complex topics simple and accessible. Looking for more in-depth information on specific topics like FHA loans, credit repair, or negotiating tactics? Check out our playlist linked on screen and in the description. We've compiled additional resources to empower your home buying journey further. Remember, knowledge is power, and smart shortcuts are key. Until next time, happy home hunting, and may your journey be as lazy and successful as possible. Thanks for watching.